Hello and welcome to a brand new episode of ET Markets exclusive segment. Well, my name is Janand, and today we have with us a very special guest, Nilesh Shah, who's MD and CEO at Kotak Mahindra AMC. Welcome to the show, Nilesh Shah.
Thank you, Kshitish Bhai, for having me here.
Thank you so much for taking the time out, Nilesh Shah. And let me just quickly understand from you that market sort of took a U-turn after falling by about 6% post the election results and hit a fresh record highs in June. What are your views on the market? This is something which lays down the foundation for my future questions as well.
So, Kshitish Bhai, we have been Permabull on Indian market and we continue to maintain the same trend. From 10th largest economy to 5th, that journey we have seen in last decade. 5th will become 3rd in next few years. Okay. And then will continue to march ahead to become a Viksit Bharat. That journey is something which keeps us bullish on the market. Undoubtedly, markets will have their ups and downs. There will be bull market, there will be bear market. But overall, being an investor, you will make money in India.
Well, I'm sure a lot of people who are listening to this conversation, they'll agree to it more than they want. And why I say that is because the way how retail investors have actually come into the markets, Nilesh, and you've also been running a campaign, at Kotak Mr. SIP. We'll definitely discuss about that and more on the SIPs. But the next big event, that the market will be watching out or will be tracking would be the final budget of 2024. Do you see a sort of a shift in policy making amid the coalition government?
Undoubtedly, yes. There will be some policy recalibration because of the electoral verdict.
Right.
Now, there are few things which will continue. For example, Digital India. Every party will push it. Infrastructure building, that will continue. Focus on manufacturing and defense, that will continue. So all those things which give momentum to the economy, that's likely to continue with fiscal prudence.
Okay.
Now, there are few things which will be put behind. Land reform, farm reform, labor reform. These are contentious issues and they are likely to be put onto the back burner because of coalition politics.
Right.
I still feel that India will remain the fastest growing major economy based on the momentum which we have built through infrastructure investment, through ease of doing business.
Right.
This budget will be vote on account plus policy recalibration. Vote on account did give fair view about the future. There will be some policy recalibration to take into account coalition requirements, but overall it should be pro-growth budget.
Right. Overall, a pro-growth budget. That's a verdict coming from Nilesh. Nilesh, you're also a big fan of cricket, and so how's the current season, of IPL going? And is there any reference for investments for investors as well? And this time we have some new teams as well as new players. From my side, can the new teams be referred as Gen Z investors, in the playing field?
So many months back when Glenn Maxwell played that beautiful inning against Afghanistan in the World Cup, I wrote an article saying that retail investor is the new Glenn Maxwell in Indian equity market.
Okay.
I never thought it will happen on the electoral day.
Right.
When exit poll was announced and markets went up, foreigners came to buy, cover their short, unwind their hedges. Retail sold off heavily. On the result day, when markets corrected, retails bought heavily. I think in 2 days, they really played like Glenn Maxwell played against Afghanistan and turning defeat into victory. More importantly, Kshitish Bhai, this retail investor is also playing all kinds of formats very well.
Right.
If electoral day around was T20, very quick decisions, There was a test match being played between October 21 to June 22, where FPIs sold about 250,000 crore worth of Indian equity, and
Right.
retail via direct participation as well as via mutual fund kept on buying. They also played one day international kind of scenario in COVID 20, where April, May, June FPIs were sellers aggressively. So
Yeah.
our retail investors have matured how to play one day, how to play T20, how to play test match. And that gives confidence about the future of Indian market.
Absolutely. Rightly said there, Nilesh. And my following question is actually around the retail investor only. And, it looks like, retail investors are living the SIP dream, and monthly flows are inching towards 21,000 crores. They have become more mature, as rightly pointed out, in their approach and working systematically to invest in the growth story or the India growth story. So, what are the trends that you're seeing in Kotak among the Gen Z with respect to their investment journey?
The Gen Zs are more digital and tech savvy compared
Okay.
to, let's say, old generation.
Hmm.
Second, they are more willing to experiment compared to old generation. So they don't mind trying out variety of things. Now, sometimes it is good to jump from one moving horse to another,
Hmm.
but most of the time our experience suggests that it's worth giving time so that your seed can become a tree. If you
Right.
keep on planting seed from one place to another because it hasn't grown, you are unlikely to benefit. So there are some good things to learn from Gen Z. Their knowledge level is far higher. They are technologically savvy, but sometimes they are impatient and they want to achieve everything today. Some
Right.
amount of patience will be needed there.
Right. Absolutely. Now, in fact, we've already talked about that, the policy, there could be a shift in the policy making. And the next big event the market will be tracking will be final budget 24. Yes, there will be shift in the policy making. Any sectors you think that'll be in focus with respect to that?
So we expect there will be some amount of consumption boost, especially for rural economy. Now,
Okay.
it could be through rural construction like Pradhan Mantri Awas Yojana. It
Mhm.
could be through more allocation to Manrega, which creates employment on a temporary basis.
Right.
It could be through infrastructure development in rural India, through water or road or such kind of things. But in one form or another, we believe there should be some boost to the consumption, especially at mass market and at the rural side. On
Okay.
the other hand, we also pray that there should not be any change in the taxation of long term capital gains.
Right.
Uh, Investors prefer tax stability, and along with distribution tax and STT, there is a fair amount of tax paid by equity investors. So,
Right.
possibility on equity taxation and some amount of policy recalibration for mass market and rural consumption. And there should be continuity from boot on account in terms of fiscal prudence.
Absolutely. Now, let me also touch upon the market cap, which is actually stands tall right around about $5 trillion, 5 trillion, uh, and which is and we briefly sort of pipped Hong Kong in the past few weeks as well, and to become the fourth highest equity markets globally. How are placed among the peers? And there's a lot of talk, Nilesh, about the valuation, which is sort of running higher compared to historical averages. Does that something which also concern FIs at this point in time, because we're seeing a little bit of sell up from that side for some time now?
So we carry expectations like Rohit Sharma or Virat Kohli. Every time we
Okay.
come to bet, people expect us to hit fours and sixes.
Right.
People expect us to win the matches. Now we all know that's practically impossible. But people have expectations as reflected into our valuation. We
Okay.
trade about three times valuation of China. We trade about eight times valuation of Russia. we trade about 2.5 times valuation of South Africa and Brazil. Undoubtedly, there are expectations. We have to deliver better earnings growth than our peers. Our PEG ratio is not at the top of the hip, it is at the middle. As long as we deliver earnings growth, our valuation will be maintained. The
Right.
second thing is governance. India has always respected external capital. There are examples of how companies like Suzuki and Hyundai have made or will make money on their investments in India. That governance should continue. We are getting higher valuation because we are better governed, and we
Right.
should maintain that place. Finally, the third thing in today's world, Satish Bhai, will be green transformation. China has become leading economy in the world, but they are the largest contributor of carbon in the environment. We
Exactly.
are the
Right.
lowest per capita carbon emitter in the world. Now, I don't have luxury of creating growth by compromising environment.
Right.
Already we are witnessing 50-degree temperatures in many places.
Right.
So we
Exactly.
have to create a green transformation of India. It grows, but not at the cost of environment. I think if we can deliver on this 3G of earnings growth, governance, and green transformation, our valuation will be maintained and people will count us as all-time great players, even though maybe in few innings we will not deliver up to expectation.
Right. Well, good point there, Nilesh. 3G, that is what investors as well as institutions should be tracking at this point in time. Apart from that, what is the rate trajectory you see for the US Fed rates for FY25?
So Fed wants to cut rates, but they are not getting data to cut rates, and hence they
Okay.
are holding back.
Right.
Fed has done an extremely well balanced approach between growth and inflation. Inflation is contained, though not to the extent their target was at 2%. Growth has not turned into recession, though it is subdued. So Fed has done a tremendous job, and they would like to take corrective action on rate cuts as expected by the market, but they are not getting any data to support it. My feeling is that Fed will be data driven. They would not like to let go all the hard work they have done by making an spontaneous error of judgment. They
Right.
will probably wait for inflation to come down and then move on rate cuts rather than preemptive.
Right. Absolutely. Nilesh, there's also one thing that there's too much emphasis on the consumption story, especially in Modi 3.0. And we've seen a lot of chatter around this particular theme, you could say that. So do you see turning out to be the wealth creator for investors in the near future?
So again, Kshitish Bhai, below $2,000 per capita, roti kapda makans were necessities.
Right.
Above $2,000 per capita GDP, travel, entertainment, tourism, education, healthcare will become comforts.
Right.
Consumption story will transit from necessity to comforts,
Okay.
from mass market to premium. And will it create wealth for investors? Undoubtedly, yes. As countries per capita GDP grows, the propensity to spend money is likely to increase rather than propensity to save. As
Right.
people become more confident about future, they are more likely to spend. So consumption is an evergreen story. And at this point of time, monsoon is expected to be good, though it is delayed in Mumbai, which will boost rural and agri. Government is likely to recalibrate their policies that should
Right.
again benefit consumption. And most importantly, consumer stocks have been derated. Put
Right.
all these things together, consumer will be wealth creator for investors.
Right. And finally, Nilesh, let me also touch upon the sectors in which you're overweight and underweight on, if you can give us any highlight or any reference to that as well.
So we have been overweight manufacturing theme across our funds. That was a play on China plus one,
Okay.
plus certain select Indian companies who are globally competitive because of scale or technology. We believe this theme will continue for many years to come together. The second sector where we are bullish is related to private banks.
Okay.
We believe valuations there have been derated, and time has come for private banks to start outperforming the market.
Okay.
We were also long domestic cyclicals like cement, auto, real estate. They were more a play onto the rising prosperity in India
Right.
and some of the historic underperformance. Going forward, we believe consumer will be one sector to watch out for.
Okay.
Second, private sector banks, we are already overweight and we believe it will outperform.
Hmm.
And one sector where our confidence level is right now low is IT sector. They
Okay.
have been not replacing people who have left them, which means instead of recruiting 1.5 to 2 lakh people a year, they are
Right.
letting go 60,000 people. We believe at some point of time, the appointment letter which they've issued to engineering students will get honored, and those guys will move from college campus to office campus. That will be confidence about the future volume growth in IT industry, and that will be the good time to accumulate IT stocks.
Right. Well, on that note, thank you so much for your time, Nilesh. And that's all for now. But do stay logged on to etingmarkets.com for more on news, business, and economy. Thank you so much for your time, Nilesh.
Thank you.